Yo guys, what's going on? Welcome back to another weekly forecast, and yes, I finally decided to make the video. Well, it's actually been my third time trying to make this video, if you believe it or not. But the thing is, it's just my mic wasn't working or wasn't connecting every time I was recording it. So it was just I've recorded many half an hour videos without sound. I thought I'd learn after the first time, but no, I just assumed I was working. Anyway, we're working now. I've checked it, tested it. Hopefully we can finally record this video. I did say I was going to upload it by tonight, but things happen and life's not that easy. But let's just sort of get straight into it. Before the weekly forecast, I usually do a breakdown if you're new to these videos. And I'm going to quickly break down, recap the VIP results, recap some of the good trades that we took. Obviously, yeah, the bad trades that we're sort of going through and learning from. But let's sort of jump straight into it. If you have a look at this message right here, last week we made around about sort of 2.7%, around 2% on gold and US30. Each trade was a 0.5% risk. I know I've got a few people asking me questions about results and how much I risk per trade, but I've noticed that around 0.5% to 1% is pretty much a good way to keep your risk managed. Some people may be happy to increase their risk, that's fine. You know, it's not just a set number. Sometimes if I feel very confident in the trade and I know that, you know, this has worked many times, everything's sort of ticking every single box, confirmations are all there, then I tend to sort of increase my risk. But normally on our normal setups, it's just always best to risk 0.5%. And if it does sort of go your way and head in the right direction, you can look to add and scale back in if your stop loss is at entry and sort of thing and you're all sort of protected. But that is a way, you know, that's what I teach on VIP and teach sort of members and how to sort of manage their trades. They can sort of have that one-to-one sort of mentorship from myself, who's just had, like, you know, quite a lot of experience in when trading gold and USD and how to sort of risk manage. I've been through it. I've been at that point where, you know, I just can't get a winning week, or I make profits and I just lose them, and you know, there's many accounts I've been blown, and I'll speak about that at a later date. But just know that, you know, we're here to help anyway. But as you can see, we've got the VIP link has been shared in the free channel. If you're not in the free channel, don't forget to join the free channel, because we do send some banging setups. As you can see, we did try and send this one at 23.1.5, 23.21.5, 24.21.5. This is actually a typo. Turns out we actually didn't hit the limit and wanted to go up from there. In VIP, we ended up entering a manual order because we knew that price would want to just continue higher without falling back into this inverted fair value gap, and price went and attacked the highs right there. So let's quickly jump onto the charts and have a quick look at what's going on. The benefit of recording it a day late is we managed to sort of continue up towards this 1 hour fair value gap, which is what I was expecting if I was recording on the weekend. I was trying to say many times, as you can see, the swing point levels are still here. Price is not breaking any prior low. So why are we selling? Right? This is one reason why I was still trying to buy on a Thursday, or was it on a Friday? I think it might have been a Thursday. No, it was on a Friday morning. I was expecting price to continue pushing higher because price has not broken any of these prior lows. We have a swing point here, which was created on Friday, where price tapped into that inverted fair value gap, which we ended up missing. And one thing I do want to talk about this as well, if I mark this original inverted fair value gap. So this was the original setup at 24.21. This was the buy limit I did send on Friday here to the free channel. 24.21, tap into this inverted fair value gap to climb up. Now, before I talk about sort of what's going on, let me break this down first, because this is quite an important thing that I wanted to mention. Our buy limit was sort of placed around about this time, right? Around, let me get a line instead, it'd be better. So a vertical line, just to show when I sent it, right? So it was around about here where I sent out this buy limit. I was expecting price to fall down from this area here into this box to then push up, right? And you can notice that if I cover all the things to the right and just zoom in here, you notice that price only stopped at this 15-minute fair value gap, which is around about this area here. If I draw that right there, like so, you notice that price only stopped there, right? It's respecting the 15-minute fair value gap. Nobody's closed below it, so it was still respecting it, and only just the wicks tapped in, right? At this point, I realized that price may not tap into here and actually go towards these highs before US session. So what we did is we manually entered this area here. Stop loss was still below this box. It was around about 30-40 pip stop loss, and then the target was up here, which was around about a 60 pip take profit right there. So I was happy to take it before because it was before New York session. I don't like to hold my trades too long because, again, New York session can reverse the price action. So I'd be happy to take the money from there. So on this trade, we made 1%, right? Because it was a little higher than a 1-to-1 as well. So it's a 1% trade right there. Now, what ended up happening is look at price drop into this inverted fair value gap. Let me just move it higher so it's actually bang on to where I want it. And then what happened straight after? Straight after it tapped into this area, it went back up to create a new high here. And this was a clean sort of 150 pip move in 45 minutes, right? And you may be like, oh, wait, why didn't you get in on that, bro? Wait, what's going on? What are you slacking for? But the thing is that when we entered the trade, my mindset has already been focused on that one trade. I've done more one trade. I don't want to get back in the market to refund the money. Again, I was also away from the charts as well at that time. But if we didn't even look at the chart, well, you can monitor the chart. If we didn't even look at entering at all, because our specific time that we enter has not been triggered, this is 8:30 candle, right? This is when we should start really looking at the charts and then start analyzing. Obviously, you can sort of analyze before to give yourself a bias, but in terms of finding entries, we should look after a certain time. Because if we saw this sort of price action and we knew that, okay, right, price has moved from low to high here, it's creating a new high, right? I'm expecting this level here, this whole sort of order block to hold now, because this has now become an order block. Why? Because its price has pushed down to one direction and broke up and used it to push higher. This whole thing is an order block. Now, if we then start looking at the chart saying, okay, that prices are moving up at 24.31, and then we have a big drop into this order block again, this is still a valid place to buy. And this would have been your only buy position that we would have taken with your stop loss below the prior low there. Because look, the timing was right, everything was right, price is not breaking any of the swing lows, and the price would have continued higher. And technically, if you look at what price action is doing at the moment, you could have still held this trade all the way. So that is the benefit of hindsight, but it's also the benefit of just sticking to the times. A lot of people, it's very hard in terms of running a signal group as well, when people are just expecting trades all the time. But we can't. When we have a specific strategy and we know the specific timings work, we only like to enter at specific times. So if you did enter at this area, well done, because you would have been able to hold this whole trade from down here all the way towards that 1 hour fair value gap, which is where price is heading at the moment. So that's what I wanted to break down for you. I'm going to keep it nice and short there, and let's quickly jump into the weekly forecast before the week ends, because as you can see, the price is already running away and we're just waiting to see what happens. So this is another swing point that has been created. Where is my copy paste? Right. Oh, bang on, nice there. Right, so looking at where price is going, we are currently, if we go to the daily time frame and then just reset this scale here, you can see that price is moving up in an uptrend at the moment on the higher time frame. Price has failed to fill this gap, which is a very, very bullish sign that price is not sort of breaking any structures. It's keeping these prior lows intact. As you can see, our price is climbing up. We have a sort of consolidation that we're getting ourselves into, which I don't think will hold for much longer. I have a feeling that I don't draw trend lines, as you can see. I can't even align it up correctly, but you can see that price is sort of wedging in this sort of flag, whatever it's called. You can see that price is sort of heading towards the top side here. I have a feeling that we may get sort of a retracement, and then we could potentially get a little bit of a rocket ship around about CPI, PPI. Today is a day that I would like to ignore and try not to trade, because I know it's going to be liquidity creation for PPI, which is tomorrow. Is it PMI? Yes, PPI, which is tomorrow, and then we have CPI on Wednesday. So if we have a look at what's going on here, we have these swing points, but I have a feeling because there is a gap below these swing points, I tend to be a bit wary that price could use collect the liquidity from these three lows here and then push higher. But I feel like we may need to see a break in the structure first. So we have this previous weekly high. If price wants to collect this weekly high, this will give us the understanding that price wants to push higher. It's collected the weekly high. If it pushes down immediately with PPI, with CPI into this area, this could be an area where we could see a potential reversal to push price back higher. That is my sort of bullish scenario going into next week. Now, in terms of a bearish scenario, I do need to see some more because I'm not liking how this is sort of pushing up. We are bullish on gold anyway, so you know, even though I know my short setups are a lot better than my eyes just a lot better in finding shorts than looking for buys. But what we need to see is, because we have these lows right here, I want to see this 1 hour fair value gap hold. I have a feeling that if price does not want to close up above here and just close in here and start pushing down, then we potentially could see some move like this where price wants to just push down, break below, give it a little retracement here. If news is around about this time, like PPI, CPI, something, price may want to push down. But I'm following the same sort of structure as usual. I'm looking for that Monday, Tuesday, Wednesday bullish move and a potential reversal from Wednesday onwards, right? Let's have a look at what happened last week with that sort of same analogy, right? If you look at last week, we have Monday, which is this candle, right, undo, Monday, Tuesday, Wednesday, all bearish, 3 bearish candles, right? Thursday, Friday, bullish. I'm just going to tick them because they're bullish. You can see that we had that sort of midweek reversal after Wednesday, and then Thursday gave us that main move with Friday to continue higher. This obviously doesn't happen all the time. It's not as clean as that. You may get some odd days like what we had here, where you had a Monday, Tuesday, Wednesday, and Thursday was bearish, and then Friday was bullish. But you can sense that sort of when you get towards the end of the week, or when you get to midweek, you can start looking for that midweek reversal, and that's what I'm sort of looking for here. Or maybe we'll see Monday and Tuesday and Wednesday be bullish to take out the previous weekly high, or even to push higher, and then potentially we could get a big drop on Wednesday, Thursday to retrace on Friday, and then going into next week we can continue a move back up. So you can see that this is sort of a longer, higher time frame weekly forecast. But I'm going to keep it right there in terms of the analysis on gold. Price is now pushing up into this 1 hour fair value gap. We'd like to see how price holds from here, but I'm expecting for price to push above the prior weekly high here to collect that liquidity, to give a nice chunky drop back down towards 2400, and for price to potentially hold off 2400 to push higher, because I am still bullish on gold. Obviously you should be. I don't know why you wouldn't be at the moment with the fears of recession and all that good stuff. I think people are going to be starting to push gold higher again. And look at that clean, there's a clean 2500 level which is sitting above here, so I wouldn't see why price wants to get to that key level of 2500, and potentially then do we get a potential drop? I don't know. That's something that we just have to wait and see. But that's enough for gold. Let's quickly switch over to US30, because I know on US30 we did take a nice 1.5% trade in the breakdown, and that was something from here where we noticed that we had equal highs here during Asian session. Price pushed down London like that, and just at New York Open, apologies, just at New York Open we ended up getting that straight move to the target, and there was a 300-point trade. That was so clean, and you don't get those as often, but you do get them, say, once or twice a month. And when you get those moves, you know that price action is so clean, goes to your target, and that's one of those stress-free days that you tend to get. But look at this gray area, right? We have a gray area called the new week opening gap, and you can see how price used it all of last week. The whole of last week, price kept coming towards it, dropping, come towards it, and used it as a magnet, and price is now consolidating within this area. This new week opening gap is a sort of generated, not by random, it's generated on purpose for a liquidity sort of area where price can be used to either build up orders here and push price down, and then also be used to bring price back up to this area. I have a feeling in terms of US30, I would like to see price break all prior highs here and tap into this 1 hour fair value gap, and then potentially give us a breaker structure if possible to use this new week. This was last week's opening gap, apologies, I didn't mention that. This is from last week. It starts around about the 2nd of August. So you can see now we're around about the, say, 11th over here. There may be a little gap in here, but you can see it opened within the same place. So I'm going to be using the larger one that we have for price to use that and push price back down towards the sell side and this weekly low. Because I noticed that price has tapped this weekly low and started pushing up. I have a feeling that there's going to be a lot of stop losses sitting here. So I'm expecting for price to give us a little drop again, because we have a big chunk of liquidity that was left, or balanced price range you could call it, but still gaps either way. So we want to see price tap into this 1 hour fair value gap, give us a little break of structure, retest, you use this new week opening gap, well, as I said, last week's opening gap, and then push back low again. That's a quick US30 update there. I'll keep you guys updated. If you guys want to join CPI, if you guys want to join VIP before CPI release, the link is in the description in the free chat. There's a discount applied, or I've dropped my prices just so we can sort of get some new members involved and make it more affordable for you guys, because we still provide those great results with great analysis. It's just at a cheaper price for you guys. But that's pretty much it from this weekly forecast. It's been a Waste FX. Peace out.